It's January 18th, 1980. You're standing in the New York commodities pit. Silver just hit $50 an ounce. Last year it was $6. Two Texas oil heirs own more silver than the US Treasury and the Soviet Union combined. In 60 days, they'll lose $1 billion in a single afternoon. So what the hell happened? Imagine 1973. The radio's playing Killing Me Softly. Gas lines stretch around the block. Nixon's about to resign. America feels broke and angry, and the dollar in your wallet buys less every Tuesday than it did the Tuesday before. Inflation's eating the country alive. In 1971, Nixon yanked the dollar off the gold standard, and ever since, the only thing backing your money is a vague promise from a guy in Washington. People are scared. People are buying weird things. Survival bunkers, coin collections, land in Wyoming. Enter the Hunt brothers. Their dad, H.L. Hunt, was a Texas oil wildcatter who died in 1974, leaving behind one of the largest American fortunes of the 20th century. Estimates ran from $2 to $5 billion. The exact number was never settled because nobody had ever sat down and counted. Three sons split most of it. Lamar, the youngest, founded the AFL and bought the Kansas City Chiefs because that's the kind of thing you do with leftover oil money. Herbert, the middle one, was the brother, quiet, agreeable, the guy who shows up to the meeting. And then there was Nelson Bunker Hunt. Bunker. Bunker was the strategist, also the eccentric, also worth, on paper, several $billion. Bunker drove old Cadillacs. He flew coach. He ate chicken fried steak at diners and complained about the prices. He had a saying he'd repeat for the rest of his life, in the same flat Texas drawl, whenever anyone asked him about money. We'll come back to it. Bunker didn't trust the dollar. Bunker didn't trust the government. Bunker trusted things you could hold in your hand and weigh on a scale. So when Congress re-legalized private gold ownership in 1974, yeah, gold was illegal for Americans to hoard from 1933 until 74. Look it up. Bunker started buying, but not gold. Bunker did the math. Gold had everybody's attention. Silver didn't. Silver was the dirty cousin of the precious metals family. Industrial, boring. $6 an ounce, forgotten. That was Bunker's edge. Or so he thought. By 1974, the brothers were buying silver by the truckload. Literal truckloads. They'd take physical delivery and ship it to vaults in Switzerland and Texas. Not paper contracts, not promises, bars. Heavy, stamped, real-world bars. The plan was simple. Buy enough silver to make silver scarce. Wait for a panic. Sell into it. The plan worked. For a while. By 1979, silver isn't $6 anymore. It's 11, then 16, then 20. Bunker's not done. Bunker flies to Saudi Arabia. He sits down with sheikhs in palaces with too many fountains. He explains slowly and patiently that the United States dollar is going to collapse, that paper money is a fiction sustained only by inertia, and that the only true store of wealth is silver. The sheikhs, who already own most of the world's oil, find this convincing. They form a partnership called International Metals Investment Company, IMIC, and start writing checks the way you and I might tip a barista. Imagine if today, two Texas billionaires teamed up with the Saudi royal family to corner the entire global supply of, say, Bitcoin. Now imagine they actually did it. By the fall of '79, the Hunt Saudi Consortium owns roughly 200 million ounces of silver. That's about a third of the world's deliverable supply, roughly equal to what the US Treasury holds, more than the Soviet Union holds. Two Texas oil heirs and a few Arab princes own more silver than the world's two superpowers, combined. The price keeps climbing, 25, 30, 35. Now a thing starts happening at the street level. Coin shops in Buffalo and Sacramento and Tampa run out of inventory. The phone keeps ringing. Old men come in carrying shoeboxes of dimes from 1959 and walk out with envelopes of cash. Grandmothers melt down the family tea service. Dentists report break-ins for the silver in the dental supplies. Coin dealer to a customer, late 1979. Lady, I can't pay you what your dimes are worth. There isn't enough cash in the register. $40 an ounce. Bunker, asked by a Forbes reporter how much silver he owns. I don't know. I'm not in the silver business. I'm in the I don't trust the dollar business. 45. The COMEX, that's the New York Commodities Exchange where silver futures get traded, starts noticing a problem. They've sold an awful lot of contracts that promise to deliver actual physical silver. They're now realizing they don't have actual physical silver to deliver because two guys from Dallas have most of it in a vault in Switzerland. CFTC regulator on the phone to a colleague, late 1979. Two guys in Texas just took our silver market hostage. What do we do? Somebody needs to call somebody. Wait, what does it actually mean to corner a market? It means you own so much of a thing that anyone who needs to buy that thing has to buy it from you, at your price, on your schedule, with a smile. January 17th, 1980. Silver hits $49 an ounce. The Hunt's position is now, on paper, worth approximately $4 billion. $4 billion in silver that they bought with a few hundred million in mostly borrowed money. January 18th, 1980, silver hits $50.42, all-time high. The Hunt brothers are, that afternoon, the richest private silver holders in the history of the world. So they did the obvious thing. They kept buying. It's January 21st, 1980, 3 days after the all-time high. The COMEX Board of Governors meets in a conference room above the trading floor in Manhattan. The room smells like cold coffee and panic. 9 men around the table. Most of them, personally, have shorted silver. That means they've bet the price will go down. That means they are, this week, getting absolutely crushed. You can probably see where this is going. The board doesn't say what it actually wants to say, which is, this market is broken because we made bad bets and we'd like a do-over. What it says instead is, we are amending the rules of trading silver, effective immediately, in the name of orderly markets. The amendment is called Silver Rule 7. It is short. It is devastating. It says you can sell your silver position, but you cannot open a new long position. You cannot, in other words, buy silver as a new bet that the price will keep going up. You can only sell. Read that twice. The exchange just made it illegal to be a buyer. Imagine you're playing Monopoly. You own all 4 railroads. You own Boardwalk and Park Place. The other players are about to go bankrupt paying you rent. And then, mid-game, they vote that nobody's allowed to land on Boardwalk anymore. That's Silver Rule 7. The price reacts the way prices react when you remove all the buyers from a market. Down, 48, 46, 43. Each tick a small cut. Bunker's on the phone from Dallas, yelling about a conspiracy. He spent 10 years saying the system is rigged. Now the system has, on the record, rigged itself against him. He's right. He's also finished. Herbert. Bunker, we should sell some. Bunker. We're not selling. Through February, the price keeps softening. 40, 38, 35. The Hunts are still, on paper, fabulously wealthy. But here's the thing about commodity positions financed with borrowed money. You don't need to lose all your money to lose. You just need to lose enough that your broker calls you and asks for more cash to keep your bet alive. That's called a margin call. Margin calls do not care that you are a billionaire. Margin calls do not care that your daddy was H.L. Hunt. Margin calls only care about one thing, whether you have the cash. Today. Buy close. In late February, the brothers' main brokerage, a firm called Bosch Halsey Stewart Shields, sends them a margin call. Then another, then another. By mid-March, the Hunts are scrambling. They're pledging oil leases. They're pledging racehorses. Bunker, allegedly, tries to pledge a Mercator Atlas worth several $1 million. Bache wants cash. March 27th, 1980, Silver Thursday. Botch calls Dallas at 9 in the morning. The number this time is $100 million. Cash. By end of business. Or Botch liquidates the entire Hunt position into the open market. Bunker is on a plane to Paris. Bunker does not pick up. 11 a.m. New York time. Silver opens at 21.6, $2 an ounce. By 11:30, the rumor's loose on the floor. Botch is going to dump. Brokers start front-running. The price drops $1 in 5 minutes. Then another. 12 noon. Silver is at $17. The pit is screaming. Phones are off the hook. 300 floor traders pretending to be calm and failing. 1 p.m., silver is at $14. 2 p.m. silver is at $10.80. Between 11 a.m. and 2 p.m. on a single Thursday afternoon, the Hunt brothers' silver position drops from approximately $4 billion to approximately $2.3 billion. $1.7 billion of paper wealth gone. A ranch, a racetrack, a small country, gone, gone, gone. But that's just the Hunts. Bache, the brokerage, has now liquidated a position larger than its own capital. Botch itself is technically insolvent for several hours that afternoon. If Botch fails, it takes down its counterparties. Its counterparties include three of the largest investment banks in America. If those go, you have a 1929 class banking event before sundown. A floor trader late afternoon. They thought they were too rich to lose. Turns out nobody's too rich to lose. The Federal Reserve calls an emergency meeting. The Treasury Secretary is on the phone to Paul Volcker, the Fed chairman. Volcker is the guy who has spent the last year deliberately strangling inflation by jacking interest rates to 20%. Volcker hates speculators. Volcker hates the Hunts. Volcker hates having to clean up someone else's mess. Volcker cleans up the mess. Within 72 hours, the Federal Reserve quietly organizes a consortium of major banks, including the same banks that would have gone down with Botch, to lend the Hunts $1.1 billion. Yes, the Federal Reserve organized a $1 billion loan to the two Texas brothers who just nearly destroyed the American banking system. Why? Because the alternative was worse. The alternative was the Cascade. Bunker lands in Paris, reads about it in the Herald Tribune, reportedly says nothing for a full minute, then orders a sandwich. Congress holds hearings within the month. Senators want to know how two private citizens almost broke Wall Street. Bunker shows up in a wrinkled suit and answers every question with another question. Then a senator leans into his microphone and asks the only thing anyone really wants to know. How does anyone lose $1 billion in an afternoon? Bunker, in his Texas drawl, the saying he'd been repeating his whole life. Well, Senator, $1 billion just ain't what it used to be. The line goes viral in the slow 1980 way. Newspapers print it, cartoonists draw it, late-night hosts repeat it. For the rest of his life, Bunker can't go to a restaurant without somebody quoting him to his own face. The Hunts get sued. They settle. They get sued again. In 1988, a federal jury finds them liable for conspiring to manipulate the silver market. They get fined hundreds of millions of dollars. The bankruptcy filings come in waves through the late 80s and early 90s. The H.L. Hunt empire, one of the great American fortunes, is gone in a generation. Lamar keeps the football team. Lamar's fine. But here's the thing. Here's why this story keeps getting retold every couple of decades, slightly updated, with new names and new tickers. In 2021, a form of retail traders on the internet tries to squeeze GameStop. The brokerage, Robinhood, disables the buy button. That's Silver Rule 7 with a friendlier name. They lose. In 2022, the London Metal Exchange cancels $8 billion of nickel trades to save a single Chinese tycoon caught on the short side. They cancel them, mid-market, press a button, $8 billion unhappens. In 2024, a copper short squeeze hits the same exchange that broke the Hunts. Same playbook, fresh victims. You can corner a market. You really can. The math works. The execution is even fairly straightforward. Buy enough of the thing, scare enough of the shorts, sit on top of the pile. What you can't do is finish. Because the thing about cornering a market is that the market is not just a market. It's an exchange. The exchange has a board. The board is full of people whose own positions are getting destroyed by your corner. And the moment you actually win, the moment you really truly own all the silver, all the GameStop, all the nickel, the rules change. Not because the system is corrupt, because the system is a system. It would rather rewrite its rules than let any single player win the whole game. Cornering a market is mathematically possible. It is politically impossible. You can only ever convince the market temporarily that you have it cornered. The minute you actually do, the minute the win is real, somebody in a wood-paneled room calls a vote and the rules change, and you wake up the next morning poorer than you went to bed. The Hunts didn't lose because they were stupid. The Hunts lost because they almost won. So back to that aphorism. The one Bunker drawled at the senator. $1 billion isn't what it used to be. Turns out it was exactly what it used to be. The Hunts just couldn't afford to find out. Next time on Pleb Explainer, September 24th, 1869. Two men try to corner the entire United States gold supply. They get caught when the President of the United States, in his bathrobe on his Sunday off, picks up a telephone and orders the Treasury to dump $4 million of gold onto the market. They called it Black Friday. It would not be the last one.